Okay, so it was a red day across the board pretty much. There was a bit of a slaughter during the day, which, to be honest, there was a bit of a rally towards the end. So didn't close as badly as it really was during the day. Let's cover what happened. I mean, 4 points really: China trade, EPS print, Italy bank tax, and Moody's bank ratings. That was a bit of a bank run fear type of trade going on during the day there, mainly the early part of the day. Okay, so the S&P, look again, a bit of a run up towards the close, so it didn't close as badly as it was. I mean, we kind of tested this horizontal. I thought we could go a bit lower at least, but closed sort of middle of the range, so down not even 0.5% wasn't the worst close at all. I still think we should test this break, this horizontal, to be honest. And tomorrow, I wouldn't be surprised if we go back down again, actually, because I think the rally towards the close isn't really justified. And there are some other markets that are a bit weaker. So I find it hard to imagine people are ready to buy this amazingly strong dip. So, but they've done it before and it's worked. So let's see what happens. The Nasdaq that did test its equivalent of the horizontal support and it popped below it. But look, the close is okay, right? Bit of a hammer, still down almost 1%. So it was definitely a red day. But again, the close suggests you could have a bit of a rally tomorrow. I don't know. I find it strange to imagine people buying this, but the close wasn't that bad. I still think we need to go lower, 350, 360 at least on the Nasdaq. So if the S&P does decide to dip back down, and to be honest, if we're testing the horizontal, the S&P might as well go test this ascending, dip a little bit below, a bit like the Nasdaq. You always go a bit below, but then it's what matters is the close, and the close is okay. Dow Jones close was very good, also near high of day. Look at this hammer, down only 0.5%. And remember, yesterday's close was very, very strong. So you can see it just wants to rally. I mean, yesterday's candle was almost perfect. Today's candle, given what happened, is pretty strong still. So that really wants to go up. And to be honest, I wouldn't be surprised if it has a bit of a green day tomorrow. The Russell, well, that was quite weak. Look at that. And that's because it's tied to the banks. The banks got slaughtered because obviously you got this Moody's bank ratings cut taking place. But look, this one did test 190, so the horizontal was tested there. To be honest, the horizontal was tested on the Nasdaq perfectly. S&P almost perfectly, or you could say it was perfectly, right? If I just move it up and you can see why. Dow Jones, okay, no, not the Dow Jones, but the Russell it was. So the horizontal support was tested on 3 of the 4 markets. And look at the Russell, it was, close at high of day, strong candle, down 0.5%. Pretty good given the fact that it's tied to the banks and the banks got slaughtered intraday, but actually towards the close they didn't. Let's look at the banks. Look at this bounce, the XLF on this ascending, close at high of day, pretty much closed the gap that it created from gapping down at the open. KBE looks very strong. I know it's down almost 1.5%, but look, gap down. Okay, it opens here. It does actually go lower intraday, but closes at high of day, very close to its old high. This 42.5 zone. KRE exactly the same thing. So still a lot of strength in the banks. And if you have the banks strong on such a negative day where they are in focus, then it suggests they want to rally. Part of me looks at these candles and say it's strong. You've got to respect that. They want to go higher. They ignore this specifically bad news. They still look technically strong, but you zoom out and you think, okay, the banks I can understand, maybe they can go a bit higher. They're not like the Nasdaq, where it's absolutely near all-time highs. But you just look at the big picture and you wonder who the hell's buying. I mean, I'm talking about the Nasdaq, the S&P, and even the Russell to some extent. But the banks I can understand, they're beaten down, and maybe you can get a bit more of a pump out of them. But dangerous stuff. You're playing with matches here. But technically, the close made some of them look good. The banks look good. I would say the Dow Jones looks good. The Russell's okay. The other two, the S&P and the Nasdaq, I can't say they look good. They've run up too much. But that's what happened. Let's look at interest rates. So 1 year sideways. It's not really got that staircase look to it anymore. It looks more like it wants to drop below 5.3, and then maybe, who knows, you could have a bit of a drop in the 1 year. That hasn't happened since the bond market rallied with the financial crisis. So I haven't really seen the 1 year go down on an average orderly day, but that looks like what is setting up, whilst, you know, the other side of the yield curve looks like the opposite. Let's look at the 2 year, just middle of the range, sideways. I'm not going to say bearish or bullish, just middle of this range. You can see where I've put support and resistance. That makes sense. And just a sideways day, just unchanged. 5 years, same sort of thing, a bit down, a bit down. I mean, the bond market, I think bonds were bid because of the fear, you know, stock market goes down, people just run to safety, and the bond market is traditionally a place of safe haven. You know, you got the dollar and the bond market. So I think that's what happened today. Bit of gold buying, we'll get to that later, but, you know, still a bit of a red day. But I think it was bonds were bought. That's why yields came down. That's my take on it. 10 year, you know, nothing crazy. It's not destroying any picture, any technical pattern at all. It's just a bit of a buy. So the yields came down. 30 years, same sort of thing, down 1.5%, really. From the 5 to the 10 to the 30, just down 1.5%. Nothing crazy. The picture is intact, and the picture for me is just looking to go higher. But, you know, a bit like when the financial crisis happened with, and I'm talking about the 2023 financial crisis, the banking crisis, people just bought bonds. That's why yields collapsed, even though yields were going up before then, right? Bam. So, but again, it's pretty similar stuff. I mean, we didn't have a financial crisis today, but there were rumors of it, right? You know, people cutting ratings of banks because they look unhealthy. People buy bonds. It's the same sort of reaction. Let's look at the dollar, which did not move with yields, right? Because we have sometimes that move where it's kind of on interest rate days, or just on average days, where, you know, yields go up and so does the dollar. And here we have the dollar going up, yields going down, but that's because of the flight to safety sort of action. So the dollar went up and yields went down. Now, the dollar, very interesting here. You can see the levels I've been discussing. You know, for example, it needs to close outside of this descending. Didn't do it. Just about didn't do it. You can see for me you know, had it closed, let's say 102.7, just to be sure, that would be a breakout of this descending. And what you would really confirm it is a close above this horizontal, because that's the last high, clearly above it, above the descending. That would be clearly a breakout of the descending. And that's 102 point, let's say 8.4. We almost touched that, and we closed within the descending. So still not a real breakout. But the dollar was up. The dollar is certainly not weak at the moment. It's testing. This is so important, this area. Trust me, it's real. You know, there's a reason that it stopped around here, and there's a reason it went all the way this high and closed below it. For me, it's the technicals, and it's these zoomed in technicals that can really give you a small advantage into what's coming. Let's look at the actual currencies that make up the DXY. So euro, dollar, for me, kind of wants to go lower, but look, for now, we do actually have a bit of a support around where it is. Let's call it 109.4, you know, sort of this area. It's not very, very strong support, but you can see the last 4 candles are there. But look, we did pop our head above, so you think the euro wants to at least go back up and then maybe fail, but there is a chance it goes back up. But look, big red candle today. If we go low, I think the next support is 108. Let's say 3, this horizontal line. Dollar, Japanese yen, yeah, you know, ever since this bounce here on Friday the 28th, it suggested it wants to go up. I mean, okay, you have this drop, fair enough. There's a bounce. And to be honest, the drop is so large that it wants to go back down, but it's this bounce, this aggressive bounce from the drop. And this is BOJ, you know, yield curve control drama related. So there's some fundamentals to go with this technical, but, you know, look at these 2 candles, 1, 2, just so strong. To me, it suggests it needs to go back up here. It can fail here if it wants, but it's just such a strong bounce that it kind of justifies at least testing it. So I think we're going to go up here, 145. And who knows, you know, I have to admit it favors a move higher. So again, dollar, reason to be bullish against the Japanese yen. The pound against the dollar, we've got a breakdown and another failure to take back this ascending. So if the pound is failing, it's going to go down. And you know what? If we have the dollar yen going up, I think we could have the pound losing 126. If we get it close below 126, down we go. That's more ammunition for the dollar. So the dollar actually has quite a few things going for it. Canadian dollar, it's not the strongest weighting to the basket, but you know what? I haven't really put any trend lines here. What have we got? This one here, it's still closed within the ascending. Let's see. I don't think there's anything to really consider. But if we do start to lose critical support, especially this 0.7, 71, 72, and then we go straight to 68. I'm looking at this for the first time, to be honest, but you know, it's not the strongest weighting, so it doesn't matter too much. But you can see straight away technical patterns emerging. I'm just looking at this straight away. So I think that's all I do, those three lines. But it's more the euro dollar. I think this makes up 50% of the basket. So, you know, if the euro keeps dropping, let's say we lose this 109 area, then straight to 108, that could be all you need for the DXY to close outside this descending, and then we keep rallying. And then you probably got this US dollar, Japanese yen up here closing, and then ready to go to 150-ish, right? So watch out, the DXY could do it. Okay, let's look at commodities. So look at the copper, look at copper. It's ascending. Yeah, it closed above. It's still within the ascending. This doesn't really surprise me with the dollar going up. You know, copper was weak. It's very sensitive to the dollar, and the market's going down. That's a double whammy. So it makes sense. Goes down, touches pretty much this ascending, and close is still within it. So let's see what happens. If we lose this ascending close below it, then we probably go here. And yeah, I've drawn the lines already. No need to go over it. It's pretty clear stuff. Upside resistance, to be honest, I think you can say 3.95-ish is resistance again. If we go above that, then it becomes 4. So that's your support, that's your resistance. Natural gas. This thing is quite exciting, actually. Look at this. 1, 2, 3, 4 green candles, closed above the descending, touch this. I said it the day it touched this. That was very strong. It should rally more. It did rally more. Now, honestly, I don't see any reason it should stop. It should go test the old high, or let's say 2.9 tomorrow. Maybe a bit of sideways, maybe even a bit of a drop after that, because not only is it this horizontal, but look where this huge resistance comes in from, you know, from 10 all the way to 2.8, all the way to 3 by the time we get there. So it should be pretty decent resistance here. So we may go back down again, but I think we're going to close above this descending and just squeeze. I don't even think we're going to care about $3. I think as soon as we close above 2.9, we know we're going to 3. And I don't think there'll be too many sellers at 3, because it's going to be a scary little squeeze. So I think we're days away max from a squeeze. And then I think we get to this gap area. Don't know how long it takes. Absolutely don't care, but it looks very strong natural gas. But every time I say that, it just seems to go back down again. But I think the tease is over, you know, just like over here, it really teased you 1, 2, 3. I think here 1, 2, 3. I mean, I'm not going to look at the time it took to consolidate here, but you know, the squeeze is on for me. Very bullish. Oil, wow, I didn't know it rallied green up to the close. There must have been some news there, but for me, oil 82, 83 is a sell zone, but I have to admit, look at this ascending. Let me put the 15 minutes, maybe gives more precision to the whole move. Here, let me just read. Look at that. That's beautiful. Absolutely beautiful. And again, tested it. It's not just out of chance that it does it. It's the technicals doing their job. And for me, 83, what you can see is resistance. But to be honest, after today's close, after this late move over here, I wouldn't be surprised we start popping our head above 83. Look at that beautiful candle, that hammer candle closing a high of day, probably the best close actually so far. Again, you know, 82, 83 remains resistance. I'm going to stick with what I said for quite some time. And I think it takes a close below this ascending. That's why, you know, when I was intraday, I saw oil. That's why I'm surprised with the close. And it was all the way at low of day. And I thought, okay, that's going to close below here. And then down we go to 74, which is what I said. And then look where we close, all the way near 83. Complete opposite looking candle now. And that's why it's all about the close. So yeah, doesn't look bearish anymore. It's impressive what a couple of hours difference can do. But that's why it's about the close. And that's why technicals count. You know, again, bounce perfectly off this support. So, and next stop, if we do start to, you know, go to 84, and I think a close above 84 would really confirm the breakout of the 82, 83 resistance. Next stop would be 90. You can see why, look how many times it hits there, but also the more recent ones. Also, it's a big round number. And by the time we get there, no, you could go a bit higher after that. Yeah, 94-ish. You can see the horizontal, but also look at this descending that will coincide. Very significant months ago. So 82, 83 remains resistance, but after that, 90 and then this 93 zone. Okay, gold and silver. Now, I've introduced this new ascending. I can't believe I didn't see it before. I had a different ascending. It's a rookie error. It's not even a rookie error. I just missed it. But I drew this line in and I noticed we touched it perfectly today. So I'm going to keep it. It makes sense. 1, 2, 3, 4, 5 times we hit it over several months period. So there you go. I'm going to keep it there. After that, again, what I said before I didn't have this, is 1900 is support, including just below, you know, this 1895 flush. But for now, this one is holding. Close near low of day. Wasn't the worst day for gold. You know, dollar was strong. Silver was sensitive. You know, silver really has been catching up to the downside for a few days, especially yesterday. Look, continuation today. Now I would say, you know, before it wasn't anywhere near gold to the downside, but now I think it's past it. You know, it's sort of, it's as if gold was at, let me think, it's almost as if gold's at 1915 or something. But you know what I mean? It's caught up to the downside and didn't close at low of day, but still not the best close. So it's a down day for silver and gold. What has it got going for it? Well, gold's at some support level. And the dollar is pretty much at resistance. But again, after looking at the dollar, there's definitely a chance for it to further its breakout. And then you've got to think, where will gold go? Well, definitely 1900, immediately at 1900. The other question is, what about if the markets tumble, will gold catch a bid? And that is definitely possible. So just got to see what happens, you know. Looking at the miners, though, that was beautiful. I mean, it's a red day, but look at this. And I thought this would happen. I think I mentioned it in the last video. The fact that already we had relative strength over here. And if there's a flush, you might see some buying on that flush just to do what it did today, really, to have a little, you know, a fake breakdown and then a rally. Look at this, rally closed near high of day. A bit like the markets, but it wasn't really trading with the markets too much. Towards the close a bit more, but at the open it wasn't. And it was just relatively strong, you know, especially, I mean, look, you got silver down 1.5%. I think it was down 2% at one point, not sure. But, you know, the miners were outperforming the metal and they did the same thing yesterday. That means that they are a buy in this zone relative to the metals. They are outperforming, they are being bought. And you can see it's a buy zone. I mean, you know, we're at a buy zone. So definitely, I'm not going to say bullish, but encouraging price action to see the miners being bought. And, you know, you look at the GDXJ, look, GDXJ was down less than the GDX. So it wasn't just the seniors, it was actually the medium juniors also. So very good stuff. And again, I think yesterday was giving that away. There was relative strength already. So, you know, if you think about it, it's actually the perfect combination is gold and silver going down and the miners not going down. It's perfect if you're owning the miners. Because if you own gold and silver, I mean, I own a little bit of gold now. I used to own none. It was all miners, very aggressive stuff. But if you own the miners, I mean, Obviously, it depends how much you own in the miners, but the best combination is probably seeing gold and silver go down and the miners going unchanged or up, because you're probably making more money. And then what if gold and silver actually rally? They're going to go up even more. So for me, when I see the miners not go down and the metals go down, I don't mind that at all. So today was a good day for the miners, I would say. Very bullish, relatively speaking. And you know, if you look at some of the miners, Newmont wasn't that great today, but Agnico Eagle, Barrick Gold, the usual suspects, Pan American Silver, somewhat, Wheaton Precious Metals, the ones I usually follow, the seniors that I have, they did well. It was like an irrelevant day. So when you look at silver down 1.5%, you wouldn't think so. I'll finish off with Bitcoin, which did great. And actually, look at this into the close here, or actually after hours, very nice stuff. And you know, you got to take notice of that because it was really weak down here. And I said it needed a flush, it needed a flush. It did that flush. It hit 28,500. And look how it's been acting since then. Even though this red day, I think that was when there was a big market drop. And look, even yesterday, you know, up. I think the markets were down yesterday, no? But, you know, nice day. And today, very impressive day. I don't even know if there's any crypto news out, but, you know, you have this bit of a mini bloodbath today, and Bitcoin's up 2-3%, closing at high of day, as you can see now. Looks quite strong. It needed this flush. That's why you need sometimes little healthy flushes, and then all of a sudden it becomes a lot stronger. You know, 10 days later, it's at the same price again, and now it looks a lot stronger. And the markets are red. So for me, Bitcoin, very impressive. You've got to take note of that. Bit of a safe haven play. It never is a safe haven play, but today I have to admit, that's what it looks like. So, you know, that's it. Markets, watch out, very wobbly. We're very high up. Interest rates, they were going up, but now they've leveled off a little bit, and now bonds are being bought out of the safe haven play because the markets are wobbling. So that's interesting difference taking place in the bond market. Dollar going up, and this is not just a bounce from the flush to 99. This is a strong bounce in the dollar, and it could go higher. Look at the currencies, right? The Japanese yen, the euro, the pound to some extent, and the Canadian dollar a little bit. And commodities, look at the differences there. You've got some commodities that don't care about what's going on in the markets and the dollar. I would say natural gas, oil to some extent, uranium maybe. But then you've got the sensitive ones, the metals, copper, gold, silver. And look at the miners, you know, sometimes they disconnect from the metals. And look at Bitcoin too. So there you go. That's my little recap. And let's see what happens tomorrow. Very exciting stuff. Very exciting stuff. Good luck.